Welcome to Talk Tickers.
Good to be here.
Today, we're digging into Fiverr's Q1 2025 earnings call. Lots to unpack.
Yeah, definitely. Our goal, as always, is to pull out the key insights what really jumped out from the report and the discussion.
So let's start with the top line. How did they actually do in Q1?
Pretty strong, actually. They beat expectations for both revenue and adjusted EBITDA. So a good start to 2025 for them.
Okay, let's get specific. Revenue numbers.
Revenue landed at $107.2 million. That's up 15% compared to Q1 last year.
15%. And importantly, that's actually an acceleration in growth from the quarter before, right?
Exactly. That acceleration is key. And on the profit side, adjusted EBIT came in at $19.4 million.
Which translates to what margin?
In an 18% margin. And that's also up a full percentage point, 100 basis points from Q1 2024.
Okay, so growing faster and becoming more profitable, that's usually a good sign.
Definitely points towards, increasing efficiency in how they run things.
What about cash? How's the cash flow looking?
Really robust. Free cash flow jumped significantly. It hit $27.4 million.
Wow, okay. How does that compare year over year?
That's an increase of over 31%. 31.6% to be precise. So yeah, a big leap in generating actual cash.
With results like these, I imagine their outlook might have changed.
They felt confident enough to tweak their full year guidance upwards. They raised the bottom end of the range for revenue.
So what's the new range?
They're now expecting between $425 million and $438 million for the full year 2025.
And EBITDA guidance?
That got a bump too. Now looking at $84 million to $90 million for adjusted EBITDA for the year.
Okay, that's the full year. What about the next quarter, Q2? Any projections there?
Yep, they gave Q2 guidance. Revenue expected between $105 and $109 million.
And adjusted EBITDA for Q2?
Between $20 million and $22 million is what they're forecasting.
All right, so the numbers paint a pretty positive picture. Let's get into the why. What are the main things Fiverr is focusing on right now, their strategic priorities?
They laid out three main pillars. First, really strengthening the core marketplace, specifically by moving upmarket.
Upmarket meaning bigger clients, more complex projects.
Exactly. Second, expanding their value-added services, the extra tools and features they offer. And third, investing heavily in AI.
Okay, let's tackle that first one. Moving upmarket with Fiverr Pro. How is that different from regular Fiverr?
Right, so Fiverr Pro isn't just the standard marketplace. It's positioned as a premium service. You get access to sellers who've been thoroughly vetted.
Okay.
Plus, there's better matching tech for job requests, project management tools built in, and even support from actual customer success managers.
Sort of a higher touch, more curated experience?
Precisely. Like a white glove service for finding freelance talent.
Is this strategy actually working? Are they landing these bigger fish?
It seems like it. They highlighted a few big wins in Q1 from Fiverr Pro.
Like what? Well,
there was one deal, a $200,000 project with a book publishing company. Needed editing and proofreading, but across many different languages.
$200,000? That's not a typical freelance gig fee.
No, definitely not. And another one was a big online education company that shifted all its YouTube video production over to freelancers sourced through Fiverr Pro.
That's fascinating. And they're achieving this, they mention, without building out a huge traditional enterprise sales team.
Yeah, that's quite interesting, isn't it? It suggests the platform itself, and maybe the evolving view of freelance work, is powerful enough to attract these larger clients, maybe more efficiently.
Okay, so that's the upmarket push. What about the second pillar, the AI investment? You mentioned Fiverr Go.
Right, Fiverr Go. That launched back in February. This is where their AI focus really materializes into a product.
And how's the adoption been? Is anyone actually using it?
Early signals look really strong, actually. They said over 6,000 sellers have already activated it.
6,000 sellers. And buyers.
Over 200,000 buyers have apparently interacted with Fiverr Go features already, which, for something launched in February is pretty decent initial traction.
Okay, traction is one thing. Is it actually, helping sellers make more sales? Is it moving the needle?
Well, the conversion data they shared was quite striking.
Yeah.
Sellers using the AI personal assistant feature in Go.
Yeah.
They're seeing a 56% increase in 1-hour conversion rates. 56%.
Wait, say that again. 56% uplift in just 1 hour?
Yeah. And a 10% uplift in their 14-day conversion rate compared to their historical averages without using it.
Okay, that 56% number is Wow. What's the magic there? How does the AI work?
It's designed to be super personalized. It looks at each seller's specific portfolio, their past projects, their style,
Right.
and it uses that data to generate visuals or provide assistance like answering buyer questions in a way that feels authentic to that seller. It's not generic AI.
The goal being to help the buyer, but keep the seller's unique brand intact.
Exactly. And apparently it's working so well that they mention cases where buyers didn't even realize they were chatting with an AI.
That's kind of the Turing test for conversational AI, isn't it? If you can't tell.
Pretty much. And they're not stopping there. They plan to roll Fiverr, go out to more categories, give more sellers access, and weave it deeper into the buyer's journey on the site.
So becoming a core part of the Fiverr experience.
Seems like that's the plan.
Okay, so marketplace enhancements, AI. What about the third pillar, value-added services?
Right. This is another big growth area for them. This includes things like Fiverr Ads, the Seller Plus subscription program, and also AutoDS, which helps e-commerce sellers.
And how is that segment performing?
Impressively. Revenue from these services grew 94% year over year.
94%, almost doubled.
Yeah, it's a really dynamic part of their business now.
And it must be becoming a bigger chunk of their overall revenue then.
Sure. It's now 27.5% of total revenue.
Almost a third.
And they expect it to cross the 30% mark by the end of this year, 2025.
Do they see that growth continuing?
They seem to think it's sustainable.
Yeah.
They mentioned plans for more tiers in Seller Plus, continuing to expand AutoDS. It suggests freelancers are finding real value in these paid tools.
Okay, let's zoom out a bit. What did they say about the general economy? How's the overall demand for freelancing holding up?
They described it as broadly stable. But interestingly, they think their value proposition, being cost-effective, fast, flexible, might actually become more appealing if the economy gets tougher.
So businesses might turn more to freelancers for agility and cost savings in uncertain times.
That seems to be their view. They did say they saw specific opportunities pop up in Q1, especially in business solutions.
Leading to that better than expected marketplace revenue you mentioned earlier.
Right. They felt Q1 this year presented a bigger opportunity than the last couple of Q1s, and they managed to capture it. Plus, that focus on higher value buyers probably helps shield them a bit from wider economic swings affecting, say, very small businesses.
Makes sense. And financially, how are they managing things? Capital allocation, spending?
They stress financial discipline. One concrete example is they just authorized another $100 million for share buybacks.
Okay. Buying back their own stock usually signals confidence or that they think the stock's cheap.
Could be both. It's a way to return value to shareholders, certainly.
What about spending on growth? Marketing, R&D.
Marketing spend did step up in Q1, which they said was partly seasonal, but they expect that investment to pay off through the year, providing leverage.
And R&D, still investing heavily in tech like AI.
Yes, but they indicated R&D expense growth might be a bit more moderate for the rest of 2025. Maybe optimizing that spend now that Fiverr Go is launched?
So pulling it all together, are they sticking to their longer-term financial goals?
Yeah, they explicitly said they're on track for their 2027 targets. That's hitting a 25% adjusted EBITDA margin.
25%? That's quite a leap from 18% now.
It is, and also delivering a 14% compound annual growth rate for free cash flow over the 3 years ending in 2027. So they have a clear path laid out.
These earnings calls always have a Q&A session. Did anything interesting come up there? Any extra details?
Yeah, a few things. Going back to those big six-figure deals on Fiverr Pro, their approach seems to be finding companies already using Fiverr for smaller things and then actively engaging them, showing them what else the platform, especially Pro, can do, offering more support. Kind of a land and expand strategy.
Nurturing existing users into bigger clients. Got it. Anything else?
Someone asked about global trade stuff, like recent tariffs.
Yeah.
Any impact on AutoDS?
Yeah.
They said no discernible impact. AutoDS is mostly a software subscription, not directly tied to the physical flow of goods affected by tariffs.
Okay. And what about the freelancers? Are they pushing back on paying for these value-added services like Seller Plus?
Apparently not. The company said freelancers are generally willing to reinvest because they're seeing a positive ROI. The tools are helping them earn more or work smarter.
That makes sense. If it pays for itself, you use it. One last thing from the Q&A, the number of active buyers actually went down. That sounds potentially concerning.
Yeah, they had addressed that, and they framed it as basically a strategic choice. By focusing so much on acquiring those higher value, larger spending clients, they're okay with the total number of buyers dipping slightly, because the ones they're getting have much higher lifetime value.
So quality over quantity.
Essentially, yes. And they expect that trend might continue unless the macro environment really shifts to strongly favor very small businesses again.
Right, which might bring in a flood of smaller buyers. Okay, fascinating stuff.
Definitely a lot going on strategically.
Okay, let's pivot to our favorite speculative segment.
Huh?
This is not financial advice. Time for some outrageous but plausible trade ideas based on this call.
All right, let's brainstorm. Idea 1, maybe you consider a long position in Fiverr itself.
Okay, the bull case.
The bull case hinges heavily on Fiverr Go. Those early metrics, especially that 56% conversion uplift, I mean, if that's sustainable and scalable.
It would be a massive differentiator, yeah.
Right. If that AI assistant really becomes a core value-driving feature, it could significantly boost marketplace activity and seller success. You combine that with a steady push upmarket via Fiverr Pro.
Which de-risks them from relying only on small buyers.
Exactly. Add in the raised guidance, the confidence in long-term margin expansion. It paints a potentially compelling growth story. It's outrageous because AI hype is everywhere, but plausible given their specific early results.
Okay, plausible. What's another angle? Maybe not directly Fiverr?
Well, think about that services revenue growth, 94% year over year, aiming for over 30% of total revenue. That's huge.
Okay, so...
So maybe the play isn't Fiverr itself, but speculating on who Fiverr might acquire to accelerate that services growth even faster.
M&A speculation?
Totally speculative, yes. But they have strong cash flow. They clearly want to lead in this broader freelance ecosystem. Could they look to buy smaller companies with complementary tools? Maybe specialized marketing tech for freelancers or project management software or niche e-commerce tools that plug into AutoDS.
So you'd be trying to identify potential acquisition targets before they get bought.
Exactly. It's definitely outrageous because who knows if they'll even make acquisitions, let alone which ones. But plausible given their financial strength and strategic direction toward services. It's thinking one step ahead.
Interesting angles, both focusing on those key growth drivers, AI and services.
Well, that pretty much wraps up our deep dive into Fiverr's Q1 2025 call. A company clearly making some bold moves with AI and chasing those bigger clients.
Yeah, lots of moving parts. And just a reminder, everyone, what we discussed here, especially those trade ideas, is purely for informational and entertainment purposes. It is absolutely not financial advice.
Please do your own research before making any investment decisions. We're curious, though, what did you find most interesting? Was it the AI progress, the enterprise wins?
Let us know what stood out to you from this deep dive. Join the conversation.